No day two rally today, but that's okay. We didn't drop much, and we obviously had a pretty impressive couple days there. However, it still makes me wonder if we were celebrating a little too early. I do think that our conversation with Jim Carson also helpful, though, to think about what type of rally we will get now that we are at highs. His case was that it'll be more like a grind as opposed to an explosive move, and I do think that that rings true based on what we've seen so far. Risk radar holding where it is. We got the breakout for stocks. We got the green light there. We got the green light on bonds because we broke the trend in the 10-year yield to the upside. The dollar, though, yellow, and crypto still red. Notice the Bitcoin fade today, by the way. We haven't made a meaningful higher high yet in Bitcoin, so that light is still red. And the dollar, too, I just have trouble shifting into anything terribly bearish because we're not cutting, and many other parts in the world want to cut. So first, a chart of the 10-year for some perspective. Because bonds did sell off a little bit today, we kind of inched back, but we had a real meaningful break on the 10-year. So the level that I'm watching now is basically 4.5, which is where we were. We held sideways before we broke the uptrend in the 10-year yield. So this is not a big move here. If the 10-year starts to creep back in this direction, gets to 4.5, then all right, maybe we overdid it. Maybe we got a little bit too extended on this notion of cuts coming and all that stuff. But for now, obviously the regime's still holding here. It's a pretty good situation for stock bulls to see the dollar at 104.2 as well. But as I mentioned yesterday, what I'm watching for the dollar is basically the lows from April, which happened at the beginning of the month, and that's still below 104. That's actually, these are 103 handles down there. So if the dollar holds on here, then I think there's a good message in that about the U.S. economy, but also just the fact that we're a little bit pinned right now. Keep in mind that inflation still is just so far above the Fed's target that you have to believe that they are not going to hold up to that target if you think they're going to cut soon. And if you just think, okay, they're going to go when the data makes progress, well, the data didn't really make progress. So I think there's a lot of good reasons for the dollar to hang on here. Now, this doesn't have to stop the stock rally, but it could limit it in nature. And one thing I'm watching very carefully here is what leads us and whether or not momentum as a factor drives us. When momentum as a factor is your leading group, it's a much more powerful rally. Notice how when momentum's relative strength to the S&P just blasted off, that was at the beginning of the year, and then we went vertical. The previous couple months were okay as well, but it was at a little bit of a slower rate of change. When momentum kicked in and you see people piling into momentum trades and chasing and fear of missing out and melt up, that's the type of juicy stuff. And guess what? When we got the new high yesterday, it was on the back of a big momentum day. We had this big green candle in the MTUM ETF. However, if you see here, just since really kind of mid-March and then April, we haven't really had a big pickup in momentum's relative strength. Since momentum's relative strength, the S&P peaked, that was back at the peak for momentum. So, yes, market's in good shape, stocks are firm, but different types of rallies will depend on what leads us. And the momentum trade is the one you want if you want the frothing up and the risk on animal spirits. We didn't get it day two. Let's see if we can finish it off tomorrow into the weekend.